Meanwhile, the stock on our radar right now is Bajaj Electricals, gaining on the back of a very strong set of third quarter numbers. The earnings were driven by good growth in the LED business. The EBITDA too saw a rise of 96%. More importantly, the EPC execution really moved faster, and we had an EPC revenue growth of almost 157%. We have the CMD of the company, Mr. Shekhar Bajaj, joining us on the phone line. Mr. Bajaj, first up, congratulations on a good set of numbers. If you could tell us on your EPC business, what exactly was the execution this quarter? What is your order book and what is the execution pipeline for the next few quarters?
See, basically, our major growth has come out of our power distribution and transmission line, because power distribution, we have taken a major order for the UP to do the electrification in UP, which is a big order which we have taken. So we've done against 307 crores, we did 970 crores in our power distribution for the quarter. This quarter we've done 970 crore, and because of that, the EPC, including luminaires, our turnover has come up to 2,900 crores. And therefore we are looking at that another 11 to 1,200 crores will take place, and therefore for the year we should do a EPC business, that is B2B business, of about 4,000 crore. As far as consumer product is concerned, we've grown by 26.7%. So as I have done the last 3 quarters, we are expecting that around between 20-25% growth can be sustained even to the fourth quarter. In the coming year also, we think that our growth can continue. As far as EPC is concerned, why the profitability is gone up substantially is that our turnover has gone high. Substantial growth has taken place of 157%, and therefore to that extent the fixed cost obviously has not gone up that high, and therefore our fixed cost percentage comes down, and therefore the profits show higher. So in the coming quarters, personally I think the margins compared to what has happened in this quarter may not be as high, because our growth may not be this type of very high number of 157. The growth even the fourth quarter will be anything around 80 to 100% growth will still be there. But in the coming years and all, once the UP project is over, then we do not expect that this type of growth will be continued.
Okay. By the way, just keep your eye on the market. The frontline indices look to be coming off just a tad bit, and the Nifty is now just a shade under that 11,100 odd mark, and the Sensex too has cut its gain now to just about 130 points higher. Mr. Bajaj, good afternoon, sir.
Good afternoon.
Could you tell us what has been the volume growth in the durables business and what has been the impact of the price hike?
As far as the consumer durable business is concerned, we've done extremely well, totally 26.7%, but basically the maximum growth has come out of appliances. Appliances grown by over 40%. Our Murphy Richards also is an appliance only, so that's also by 33%, so that's happened. Fan, because of our distribution strategy that we are using, so unlike in earlier cases we would sell, fan season starts in January, February. We normally prepone the sale, and therefore we have a very strong December. This year we said we will not push more fan, because fan is required only in January, February, March, April. So therefore we should have a very good growth coming in the fourth quarter as far as fan is concerned. So for the quarter, the growth is only 6% for the fan, but for the 9 months, because the earlier time it was as per requirement, grew by almost 29.8%. So the growth in fans is in this fourth quarter has not been very high, but because of the growth of appliances of over 40%, we have grown overall by 26.7%.
Right. Mr. Bajaj, before we let you go, a quick update on all your guidance that you had given to us in the previous quarter. You had said this year, FY19, that is, revenues would be to the tune of 7,000 crores, with 4,000 crores coming in EPC, 3,000 coming in the consumer products division. Do you maintain that? And you
I mentioned that yes, 4,000 and EPC will be maintained. In case of consumer product, it may be anything between 2,800 and 3,000. So, I mean, that 7,000 figure which we had mentioned is almost going to be there. It may be 4,100 in EPC, it may be 2,900 there, but 7,000 is what we are going to push for.
All right. Thanks a lot, Mr. Bajaj, for joining us. Wish you good luck. 7,000 crores in terms of revenue for this year. That guidance maintained. The breakup would be around 4,000 to 4,100 crore coming in from the EPC business, 2,900 to about 3,000 crores coming in from the consumer business. The stock higher by about 8.5%. Just a word on Cadila. I was looking through their numbers. For Cadila, the finance cost is coming higher. In fact, it's more than quadrupled at around 45 crores. This compares with just about 13 odd crores that the company had posted in Q3 FY18, and that's primarily because Cadila, remember, there was a deal that took place where Zydus bought Complan, and Cadila was also was party to that in terms of funding. So we'll keep an eye out on what happens to their balance sheet, but as of now the finance cost has increased from 13.5 crores to 45 crores. Perhaps that's why the stock has come off by a bit of a smidge.